The $1 trillion money market bubble is set to unwind. If you want to see some incredible data, hang with us as we go over the latest map signals data-driven piece. If you could rewind back to early 22, what do you think financial advisors were telling their customers? Well, they were telling them, hey, why don't we park some money in money market funds as rates are going up? People haven't seen interest rates rise for a long time. So what do you think happened? Well, we could see on this chart of money market assets, money just piled into this really safe asset class. Rewind a couple months ago and you're looking at over 5% standstill yields on this paper. It was an easy place to hide out. But one thing that we've been harping on this channel is that interest rates are coming down. And you can see that on this chart right here. You got the Fed funds rate in red, just got cut, right? Fed lower rates. Then you got the money market assets. This is that blue line, still at near all-time highs. What's going to end up happening, what's already happening, is as rates fall, people that have been hiding in money markets, they're going to start seeing a huge income decline. Effectively, an income heist is what's happening. And so they're going to be looking for other alternatives, which is going to favor dividend stocks. Okay, it doesn't take a Mensa to realize what is coming. People are going to be looking for cash alternatives. Now, here's what's really interesting. And why I was talking about the FAs earlier is if we look at the household money market holdings by wealth percentile, you have heard about the 1%ers and all of that. Well, let's just look at some really awesome data here. And I want you to understand something. So if we look at the percentage of assets held by wealth percentile, this is as of Q2 2024, I believe. So the top 1% owns 35%. We're looking at households, 90 to 99, 41%. So top 10% is 76% of household money market. Your upper middle, 50 to 90th, that's 22%. And then your bottom 50% is only a 1%. Here's what's critical is in green here, we can look at the asset total of Q1 2022 by these tiers. And then look at the assets as of Q2 2024. So just over 2 years, you're talking about right near $1 trillion went into money markets by the upper crust of society. Now, what do you think suffered during that period? Okay, as money is flowing into money markets, what areas do you think suffered? Well, here's a great way to try and answer that question. Let's look at, this is from January 22 through July 1st of 2024. Here we can see the S&P 500 was up big, but look at what was really suffering. You got real estate down 19% over that time frame. You've got utilities basically flat at 3%. And then you've got staples up 5%. So if you guys remember when we were talking about this huge reshuffling that was going to happen, right? A lot of people left these areas for dead, right? Because they were hiding in money markets. $1 trillion, like I just showed you. This is through July. That is an awesome chart. But then we had this huge shuffle, okay? Check this out. So since the June CPI basically green-lighted the Fed to cut rates, here we've got the S&P really almost flat, up a couple of percent. But what has been flying, utilities are up almost 20%, real estate's almost up 18%, staples are up 9%. So this is from July 1st of this year through September. It does not take a Mensa to realize that dividend stocks are so underappreciated. And here's the $1 trillion question. Is this going to continue? We really do believe that is going to be the case. Now, we always talk about the big money index. If it's going up, that means more stocks are getting bought than those getting sold. Well, it's basically breaking out to multi-month highs. Even as the S&P seems like it's not going anywhere, there's just this whole rebirth that's happening, okay? People are looking for income replacements. They are buying dividend stocks. You can see that in our data. That's what the big money index under the surface doesn't really tell you. Why is this so important? Because the Fed is set to cut another 100 basis points, 150 basis points. Okay, that means all that money market income is going to grind to a halt. You're talking about a 40% pay cut. People need to be shuffling into high quality dividend growth stocks, not the highest yielding stocks. Don't do that. But high quality. And we just put out a 32 stock report that is focusing on this theme. We think this is one of the largest themes for 2025. I started investing in dividends years ago, one of the best decisions I ever did. Just something for you guys to be aware of. A lot of people are not talking about this, but this is how money works. You guys have a great one. Make sure to like and subscribe to our YouTube channel. Check out mapsignals.com. You guys have a great week.